Hello, 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 hello. Good morning. Make sure you hit the like and share button for me if you're watching on Facebook Live, YouTube. Do your do nows. Hit subscribe and hit share. So let me get into the topic real quick because I have my app activated to pick up my breakfast. So I have to be off to activate my app to let them know when I arrive. So business credit, qualifying for a house, a car. One of my questions I want to address, or I am going to address, is I received an email with someone that had did their own credit and deleted some things about 5 negative items, and they was informing me that their credit score had actually dropped, right? And wanted to know, why did my credit score drop by 15 points when I removed these negative items? And from looking at that person's credit report, the before and after, what they had actually done was delete an entire account that had one 30-day late. So deleting that account in its entirety, because the account had good credit history, payment history. Up to that point, it just had one 30-day late blemish, actually lowered their score in doing it and then helping them. So it hurt them more than it helped. So I tell people, don't cut off your nose, right, to spite your face. And so that was one of the mistakes. And so I inform people all the time that when doing late payment reversal, that it's easier on student loans, because student loans have two issues that you may be dealing with. They could be in deferment or they could be in forbearance. And so the late payment, challenge with that is a little bit more easier than accounts that are still open. And so that could be as tedious as a bankruptcy, right? Late payment reversal is when so people have, that's not as easy. Late payment reversal on open accounts like credit cards, mortgages, car notes, right? Another thing, there are a lot of my clients, it's getting to the end of the year and their charge-offs and collections have been deleted, and now they may be receiving a 1099 in the mail from that creditor, and they want to know, okay, what do I do with this? Because now this is added income to my regular income, right? Or they may have a collection that's deleted off their credit report, and now their collection company or agency writes them in the mail to still collect on that account. That is true. It's just like student loans. Just because you get deleted off of the account does not stop the creditors from coming after you, or the debt collector from coming after you. And so the debt validation process or services is a totally different services from debt collection deletion. So, if you are one of those persons who got a collection delete off your credit report, but you are still receiving statements in the mail that you have 30 days to validate it, which will totally discharge, means you will not owe the debt free and clear, and it will be deleted off your credit report. Just know those are two different services, but I do offer both, but it's two different consulting fees for those services. Another thing, getting qualified for business credit or a home mortgage is something called a DTI, which is your debt to income ratio, meaning that for credit cards, for example, if you have a $500 credit limit, your credit card should not be maxed out at $499. Or if you have a $5,000 credit limit, it cannot exceed or go beyond 30%, which will be $1,500. So in order to qualify, or if you're trying to qualify for a mortgage and you have high student loan debts reporting, right? That's an installment loan, and it doesn't have a limit or a max out amount, but you are high in debt. that is something that could qualify you or disqualify you from being a home buyer. So on the business credit side, definitely, if you're trying to qualify for business credit, you know, a minimum 680 score is needed, but also that's not the only thing that's needed, right? You have to look at your total credit profile. And if you've gotten charge-offs deleted from your credit report and you want that tax specialist in case you get a 1099 in the mail to help you with your taxes, I'm joining up me and my team, where I have a team of tax specialists and CPAs that will offer those services with you. And if you join up, it'll be $150 off any credit services that you receive from me. Also, there was a recent article I posted on my Facebook timeline. I posted on YouTube as well. That came out, was released yesterday. That if you did not adjust your 2018 W-4, that for the 2020 tax season, you could owe or get less back in taxes. So if you need my W-4 wealth strategies, you know that Trump changed the tax laws and a lot of people did not adjust their W-4s. So going into 2020, you could be owing or get less back in taxes. So if you want those W-4 wealth strategies where you can get an additional, find an additional, if you qualify, $300 to $600 out of your paycheck, give yourself an immediate pay raise by your next pay period by looking at your W-4 and see if you're losing any money out of your W-4 because you did not make those adjustments for the 2018 tax year. Then definitely reach out to me for my W-4 wealth strategies as well. My website is www.𝒞𝓃𝑒mycreditandcash.com. www.𝒞𝓃𝑒mycreditandcash.com. So I'm on my way to pick up my breakfast. You all have a great day. Make it a great day.